What is going on, YouTube? Welcome back to another weekly trade recap video. In this video, I'll be going over the price action from Monday the 9th through Friday, February 13th. I'll be going over my wins, my losses, and my lessons per usual. If you're enjoying these videos, please like and subscribe, comment down below. And without further ado, let's just get right into the price action. I'll see you guys for Monday. All right, y'all, so I got Monday pulled up here on the higher time frame. To start out with the bias and the narrative, I was overall leaning bullish here because we're respecting this 4-hour bullish for value gap, got bullish price action, inverting this bullish for value gap, and we were currently still respecting this 4-hour bearish for value gap. However, I was more leaning bullish even though it was kind of respecting both sides. There was this 1-hour bearish for value gap that I wanted to see flip. If that was flipped and inverse, my bias would be fully bullish, but going into this day, you kind of just had to be reactionary. So because we were respecting the 4-hour bullish and respecting the 4-hour bearish, you just want to have a clear path towards a draw of liquidity. I think if we inverse this 1 hour, that was a clear sign to be bullish comp, but overall just being reactionary to market open. All right, so I want to talk about this first potential trade setup opportunity. So going into the day, this was a no trade day for me. There were a couple little things for everything that I will talk about here soon as to why I didn't take the trades, but I'm just going to take these as lessons and where I can grow. But going into the day, market open, as you can see here, we manipulated all this LRL right here and we swept out this sell side liquidity, and we're producing a V-shaped recovery. And I'll play out this trade. We get the inverse and we take out buy side liquidity. So the only reason I didn't take this trade was because of ES. ES took out this internal high on the 933 candle, and on this 933 candle, we didn't inverse it and we took out the internal high. We inversed this 1 minute for value gap at 935, and it was kind of not like the best inversion ever, and it was the highest time frame inversion. The 1 minute was. So the reason I didn't smack this long was due to that reason. ES already manipulated the internal high, which is a potential point of rejection, and the inversion wasn't too amazing. So that's why I didn't take this first setup. Playing out the price action, right here is the next potential setup that I want to talk about. I'm going to show you. So we print out this 15 minute for value gap, and we did retrace into a 5 minute. So we got a 5 minute and a 15 minute right here. Going down to the lower time frames, you can just play it out. Now to talk about the next potential setup from this day, which is still Monday. It was a 5 minute continuation trade setup out of this 1 minute inversion. It was a 5 minute continuation setup from this 1 minute inversion after we already swept out this close buy side liquidity. But as you can clearly see here, we still had London and Asia in this 4-hour for value gap above, which did have an intermediate high in it. The reason I faded this setup was for the reason that we tapped this 5 minute for value gap clearly right here, but there was an unmitigated 15 minute for value gap at your stop loss. So let me try to make this a little bit clearer. This is an unmitigated 15 minute for value gap where your stop loss would be. So yes, we did tap this 5 minute and we continued higher, but I don't personally want to put my stop loss at an unmitigated 15 minute for value gap. And so that's the reason I faded this trade. I'm okay with that. Continuing out the day, just go to the 5 minute. There is one more potential setup that I also did not take because this was a no trade day. All right, so we tapped this 5 minute. There was a 5 minute inversion right here. We still had Asia and the 4-hour buy side liquidity right there. The reason I didn't take this trade was similar to the first one. ES's same 5 minute candle already took the internal high when this inversion happened, which is a point of rejection. So this day did teach me that if everything in the context of the trade setup makes sense, but one little thing isn't right, whether it's something like sweeping the internal high on the correlated asset or something along the lines of that, it doesn't mean the whole trade setup is absolutely stupid. It's just up to you to see if you're going to take it still. But I was trying to be strict and only take A+ setups that followed all my rules this week. And so I did fade all of these setups from Monday. 2 of them being for the correlated asset sweeping the internal high, which is the first point of rejection. And then the middle one, the second one being that my stop loss would be at an unmitigated 15 minute for value gap. So the lesson from today was if there's a small little thing like that, maybe I'm still going to take the setup as long as the context is still there. As you can see, we were clearly printing bullish structure here, so the bias was clearly bullish after you can just identify it. But as far as the 15 minutes unmitigated for value gap goes, I am happy I faded that one. As far as the other 2 go, I'm going to learn from that moving forward and decide personally for me, using my discretion, if the context is okay. If one little minor thing about the trade setup isn't absolutely perfect, I can still take it, obviously. But that's all for Monday, so I'll see you guys for Tuesday. All right, y'all, I got Tuesday, February 10th price action pulled up. This was actually a really clean price action day. However, I did take a loss, unfortunately, but I did learn a valuable lesson that I will talk about and implement in the future. So starting out with the higher time frame, of course, it was actually pretty easy. We're respecting 4-hour bullish PD raise, disrespecting 4-hour bearish PD raise, just bullish on the day. Obvious buy side liquidity, intermediate high above. So going into the lower time frames, I was leaning bullish, and I do have to back up a little bit to market open. So right at market open at 9:30, we do chop around for a little bit, but we make our way lower, sweeping out this 8:30 data low here, making a slight move up and then continuing lower, sweeping out Asia low, and we get this clear and obvious 1 minute inverse for value gap with a nice 1 minute displacement candle with pretty good structure. With this move up, move down, sweeping out liquidity. It's not just one big leg. So I entered in onto this trade, being we swept data low, we swept Asia low, clean structure, and high time frame inversion towards the buy side liquidity above being the New York AM high. And unfortunately on this trade, I got stopped out, and then it ran to all the draws of liquidity. So I got stopped out right there, but there is more to talk about on this day. So this going into the day, I was leaning bullish, and so that's why I was like confident in taking longs down here. But right when I got stopped out of this first setup, there is another opportunity to get into the market. However, this is where the lesson comes in from this day. I wasn't ready, I wasn't quick enough, and I wasn't reactionary enough. So moving forward, I am gonna be, but it was on the 30-second, so I have to go to the 30-second. As you can see here at 9:48, at the 9:48 candle, I got stopped out of my long position, and then I did go to TradeSync to make sure everything was okay. And I wasn't paying attention to the charts, and we did offer a 30-second inverse for value gap that I marked out right here to re-enter into the trade, which was still valid because I was confident in my draw of liquidity. So the reason I missed this setup was I wasn't quick enough, I wasn't fast enough, wasn't paying enough attention to the chart because I was on TradeSync and I just needed to do better than that. But when I did look back at the chart, I was on the 1 minute. Noticed that there was no 1 minute for value gap, so I went down to the 30-second, saw this 30-second. This was all printing live already. Wasn't ready for this big candle prints, and then I'm late to my entry. And I don't trade changing the state of delivery, but this goes into lesson number dos of today. I'm not gonna let the entry model prohibit me from taking a clean and obvious setup towards obvious liquidity, being this buy side. That's relatively equal with this PM high. That's relatively equal with this high. There's that PM high. So since I was late to the setup and I'm not comfortable trading, changing the state of delivery, I didn't take this setup right here, but you could have got in right here on this 1 minute, stop loss at the low, targeting high right there. Oops. That's a very clean and obvious setup. So more of the story for Tuesday, I'm not going to let the entry model prohibit me from entering into an obvious, really A+ setup. And then also, even though I got stopped out of my first trade, to still be ready, be quick, and reactionary to the charts, because you can literally get another setup instantly after. You can get another setup instantly after you get stopped out of your first setup. Still confident in the draw of liquidity, you got to be quick to enter that. You know what I mean? So that was an unfortunate day on Tuesday, but you live and you learn. Adding like obvious entry models, like changing the state, like this, not gonna let an entry model being like the PB model or whatever it is gonna prohibit me from taking an obvious clean setup. But also just got to be quick on the chart. I will play out the rest of the AM session. I just hopped off the charts after all of this happened because, I mean, I get stopped out and then it runs directly to the draws and I didn't re-enter, but we were just chopped. So that was it for Tuesday. Really good, valuable lessons from this day. So I'm kind of happy about that. Played this first one really well. This is honestly like a depiction of an A+ setup. However, it just got re-manipulated and went. Unfortunate. Really good lessons from this day to implement moving forward. And I'm just going to go to Wednesday now. See you guys there. All right, guys, so I got Wednesday, February 11th pulled up. I was just bullish towards this buy side liquidity. However, I did mark out this sell side liquidity, which will make sense soon because I did have to flip my bias. So remember, I was bullish going into this day, and here's 9:30 open. We sweep out this little internal high right here, and then we just dump and chop and dump. I'm honestly just going to play out the whole session. Sorry. Cool. Okay, so going into the day was bullish. What did market open do? Moved up, swept out this buy side liquidity, did not displace through it, reversed from it, moving down. And I did have all of these 15-minute for value gaps that I want to see price hold and protect so that we could go to my overall draw, being this buy side liquidity above, intermediate high. However, these 5 and 15-minute for value gaps did not hold. They all just got ran through. From that point forward, I was clearly bearish towards this low resistance liquidity. I I was bearish towards this low resistance liquidity, this sell side liquidity, and the overall higher time frame sell side liquidity right here, or this 1 hour. Wait, it's the same one, same level. So yeah, I clearly flipped my bias to be bearish. However, I was not looking for any type of shorts in here, nor did I take the, I believe, 30-second short at the beginning of the day. There was a 30-second inversion right here, but obviously I'm not going to take that from bullish. And then basically price just dumped the whole day without retracing into a 5 or 15 before the end of my session. So I wasn't able to catch anything. We just dumped. So this was a no trade day. Pretty simple. I don't need to go over it much longer, honestly. Basically the bias was bullish, so I wasn't looking for this 30-second short inversion towards this LRL. And I'm okay with my decision in being in that. Obviously I need to be reactionary, but I was okay with waiting for more confirmation as flipping these 5 and 15 minutes to then be bearish and hopefully get a continuation setup. So that would be the only lesson, I guess, from this day, but that's it for Wednesday. Pretty short. I'll see you guys for Thursday. All right, y'all. I got Thursday, February 12th price action pulled up. So I did mark out previous day low and previous day high. As you can tell, if we're chopping on the higher time frames like the 4 hour and the 1 hour, we're really just consolidating range bound with no clear direction. So what I wanted to see going into today was just a pump or dump to give clear bias, and then maybe just a continuation setup off of that, targeting either previous day high or targeting previous day low. So that was kind of the plan going into the day. Let me go back to market open right here. So with that plan in mind, I will show you guys what market open did and the day. Market open chops around for a little bit, and we take out London low and keep displacing through. And we also take out Asia low, chop around a little bit, but keep displacing through. There was no MEC model longs, and I was kind of flipping my bias to be short at this moment. So right here, we did create a 15-minute bearish for value gap that we did have price retrace and tap into. Here's that 15-minute bearish for value gap that we tapped into right here. The 30-second had a for value gap that I was looking to inverse. On this candle at 10:23, I was looking to get into the market right here. However, we did not inverse. I was going to go break even here, target this low. Being that my bias flipped to bearish, we retraced to a 15, just a continuation setup. And today was a no trade day. However, I do have this position tool marked out, and I'll explain why I faded this setup as well. Being the 30-second, the 30-second was the only for value gap in that leg that tapped the 15-minute. However, if we didn't inverse right away with no displacement, the setup is just getting poorer and poorer as time goes on. So here, I was looking for a resweep of this high to get a new manipulation. And ES and NQ both did not do that. And we finally started displacing lower, and we did get the 30-second inversion at 10:32 a.m. with a very just poor inversion candle and just so many candles through here. That is the reason I faded this setup. However, it runs directly to take profit, and I'm going to switch it over to a 1 minute and just play out the rest of the day. We do actually end up gunning towards that previous day low. So market dumped a lot today. However, I didn't think this was a high probability setup, being that we didn't inverse the gap right away. It took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Like 18 candles. Just way too many candles to inverse it. It was too choppy. The candle that actually did inverse it was not a very heavy displacement candle. Yeah, the 3 consecutive candles were, but this is just something I'm not comfortable with taking a trade with. If we did re-manipulate this high, then maybe, and also there's no new fair value gaps anyway, even if we did re-manipulate that high. I was going to take this setup if we did inverse this right away, closing right here, break even TP as I explained earlier. But I am happy with this fade. I am trying to learn and get lessons from losing trades, winning trades, and fading trades, but honestly, I don't really love it when the inverse fair value gap takes forever to happen. I just think it's lower probability. I like it to have a V-shaped recovery and happen right away. And that was the only opportunity I had that I found for Thursday. So I will go to Friday and then talk about all the lessons. All right, y'all, I got Friday pulled up here. So on the higher time frame, to me, it was honestly a bit tricky, but basically what I was thinking is we broke out of this higher time frame consolidation and moved lower, printing this 4-hour bearish for value gap. And so overall higher time frames is bearish in my opinion, especially if we do flip this last 4-hour bullish. But current draw of liquidity and here and now, I do think it does make sense sense to move to this bearish 4-hour fair value gap, especially since we are currently respecting this 4-hour bullish fair value gap. And so current draw of liquidity was maybe leaning more bullish, understanding that we were overall bearish, if that makes sense. And I'll show you guys the 1-hour time frame as well. You can see that we're still respecting this 1 hour from the left, and we made this move down. So it does make sense to kind of rebalance right now. Jumping into market open, we did have CPI on Friday, so there were data highs and data lows that were actually still intact. So market open right here, chop around for a little bit, but we do sweep the data low and the sell side liquidity. And from this point on, I was looking to be reactionary, which I was. However, I didn't take this setup right here for a stupid reason, honestly, kind of an annoying reason. It ties into the other day's lessons of how I need to be quicker and ready. I was looking to get into this setup right here. However, I was looking to get in on the 5-minute. The 5-minute doesn't show anymore because the 5-minute was taken away with this 1-minute candle at 9:43. So basically there was a 5-minute bearish for value gap that was being formed, and it was about to open. Like it had like less than a minute for the 5-minute bearish for value gap to be there. And then I was looking to inverse that 5-minute to get in towards the data high and Asia high that were relatively equal highs right here. Unfortunately, I was on the 5-minute chart, and the 1-minute for value gap right here does get inverse, and it took away the 5-minute for value gap that was forming that I was looking to enter in on if that got inverse. And remember, the 5-minute for value gap had less than a minute left to form, and then I was able to inverse it. So I was on the 5-minute chart. I see the 5-minute bearish for value gap. It was probably the size of this, and then as time just went on and went on the 1-minute chart, from here it was eventually getting slimmer and slimmer, and then it was gone. No more 5-minute bearish for value gap, so it couldn't form. And then by the time I flipped back to the 1-minute, from the 5-minute to the 1-minute, this candle already printed. This candle was printing, also bullish, and I didn't have time to enter the market from analyzing this sweep of the sell side, the sweep of the data low, and this clear V-shaped recovery. So lessons from this day, maybe look at the chart starting out with a lower time frame to make sure I can see the new legs, the new structure, and also just be quicker again, because this was a very clean setup if you were able to be reactionary and quick. There's this 1-minute inverse for value gap. You could have entered in right here, stop at the low, really big stop loss, but a clear draw of liquidity being these relative equal highs with data high, which was a CPI high, which was relatively equal with Asia high. So playing out the rest of the day really quick, I wasn't able to take any other trades, nor did I really want to, because I missed this really A+ setup. And that's the end of this session. So that's the reason I didn't fade this trade. I wanted to get in on this trade. I was pissed that I missed this trade because I feel like the frequency of the PB model is few and far between if you're taking A+ setup. So yeah, I was very pissed that I missed the setup, but you live and you learn. Honestly, it taught me a valuable lesson. The most I can do with it now is to implement it moving forward and not let the same mistake happen again. So that's my only goal. I'll never be perfect, but that's the lesson I received from Friday. But yeah, that was the reason I didn't take it, or why I messed up taking it, I guess, is because I was on the 5-minute time frame. There was a fair value gap right here. It was gonna form with this exact candle. So let's say the fair value gap was like right here or something. It was there, and then it wasn't. Flip back down to the 1-minute because the 5-minute fair value gap that was about to be open was gone. Didn't have time to analyze quick enough, wasn't confident enough, all of my own problems. And then this just ripped to the draw of liquidity. There's obviously no continuation setups, and then yeah, I was just screwed after that. But very good, valuable lessons from the week. Overall, not down much at all. I think risk management has been on point recently, ever since I locked in taking A+ setups only, just trusting the strat. But still valuable lessons from the week, which I'm happy about, that I think could really help my progress with this. But yeah, I'm going to end the video there now. If you guys enjoyed the video, took anything away from the video, please like and subscribe to follow along the journey. Comment down below any lessons that you received from the week. And yeah, I will see you guys next week for the weekly trade recap video. Enjoy your weekend. Be safe. God bless. I'll see you guys later. Peace. See you.